Now, in order to mitigate all those risks previously mentioned, or at least be able to mitigate the majority of the risks previously mentioned, this is one of the simplest and best ways in order for a new investor to start their investing journey. So as a new investor, you want to look at what we call an index. An index is designed to reflect the movement of a group of stocks or an entire market, also called a market index. So to simply put, an index is essentially a basket of different stocks or different companies. So as opposed to you just buying one company, when you purchase an index, you're now buying little portions of multiple companies. In order for you to be able to invest in an index, you have to do what we call purchase or invest in an exchange traded fund, aka ETFs. And an ETF is a type of pooled investment security that operates much like a mutual fund. Typically, ETFs track or seek to outperform a particular index, a sector, commodity, or other asset. So by purchasing an ETF that maybe tracks an index, you are now removing diversification problems, because when you make this investment, you are no longer invested in one company, but instead you are invested in multiple companies. So there are multiple indexes, but the main one that I want to introduce you to is what we call the Standard & Poor's 500 Index, aka the S&P 500. Now the S&P 500 contains the top 500 companies within the US. This helps with your investing strategy because when it comes to Wall Street, where all the investment firms are, they typically look at the S&P 500 as a benchmark. So however your investing portfolio is performing, you always want to compare it to the S&P 500. So here's a way that you can view the S&P 500 index. When you're investing in this index, you're essentially investing in your own all-star basketball team. We're talking about Luka Doncic. We're talking about Joel Embiid, Kevin Durant, LeBron James, Bradley Beal. We're talking about Caitlin Clark, Asia Wilson, Angel Reese, and so many others.